We're live. There we go. This week's free webinar. We are going live on YouTube. Just like anything else, this is a skill stack. Just like real estate investing, I'm a huge believer that you have to stack skills. So this is me getting better at my skill of marketing. So what I know about co-living, what I know about investing, what I know about real estate investing, I know probably more than just about anybody else in the country around co-living investing because I'm confident in that. I've spent over 5 years doing it, and I've spent over 10,000 hours working with 800 different investors. Here's the goal. I need to get better at marketing. This is the business that I'm in right now, and this is me exercising that muscle. So I'm going to jump right in. Welcome to our co-living free webinar. This is focused around the operator. If you are currently a co-living investor, you have one property, maybe two properties, and you're sitting there asking yourself, why am I not making any money? This is the webinar for you. This is the program for you. I want you to understand you're not alone. This business that people don't want to tell you about is, oh my God, what the hell's going on? How did I get into this? The idea makes so much sense. Single room occupancy houses, right? If I have a 3-bedroom, 2-bathroom house and I convert it over and I have 6 bedrooms and 3 bathrooms, 6 streams of income make more sense than one. So if I bought the same house and I had one renter for $1,800 and I had 6 renters paying me, then I should be more profitable. That's the strategy that we're all in. The question is, do you have any idea how to run the operations? Because after you're the one done paying all the money, you're the one that paid for the realtor, you paid for the seller, you paid for the construction, you paid all the utilities, you paid the hard money, you paid everything. Now what? Now you own a property that's actually a business. That's what I want to spend so much time talking about is how do you transition from becoming just a property owner to a business owner? And I think that's where a lot of people get stuck. We're going to jump in. This is recorded. If you don't have a chance to come back and see it, come back and watch it. You will find a different way to start thinking about your business. Welcome to the free webinar. This is what you're going to learn today. Today's going to be completely focused around the co-living opportunity. Why? What is it that we're doing? Why are we here? Why is the co-living opportunity so important for us? I keep switching this around. Let me see if I can find a better way to do this. Oh, that's not the right one. All right. We're going to focus on the co-living opportunity, why it's so important right now because of the economics. If you look at the real estate market, everybody's going to tell you now's not a good time to buy. Interest rates are high. A lot of people aren't selling. Yeah. If you go back 2008, 2017, 2020, 2022, everybody will tell you if they look back on it, now would have been the right time to buy. Because of the real estate, it isn't day trading. Why are people going it right now? Because you can still buy a physical real estate property, own that asset, and then have it cash flow so that you're paying for your own expenses. That's the real deal. This exit strategy allows you to continue building your portfolio in a market where no one else is buying. So you have a competitive advantage because you are now focused on a niche that nobody else knows. The problem is, do you know the operating business after you go live? Because that's when you start collecting rent. That's when you're the one that's actually running a business. That's the big reason. The 3-part framework, I'm going to get into what is CoLivingiQ? Why do I break it down into this 3 simple part framework? We focus on the acquisition IQ. That's a module. We spend so much time there. Why? Because in all real estate, I don't care if you're doing multifamily, whether you're doing hotels in Vegas or whether you're doing single family rentals, you make all your money on the acquisition. If you get into a deal well, then you can exit for multiple different strategies. But in this specific situation, you have to understand what you're buying for, why you're going to convert it a certain way, and after it goes live, how do you operate it so that you make money? That's the system. We call that co-living IQ. We break it up into acquisition IQ, conversion IQ, and host IQ. We're going to go over real case studies. What's a real transaction look like? I'm going to introduce you to an underwriting tool that works really well for me. It's focused around co-living. Every single exit has a different way to run their business. I'm going to just share with you how I underwrite deals so that I get into the deal correctly. 4, what is my salt bay? What is the differentiator between how I operate my properties versus anybody else? I call that the hospitality advantage. When I look back at over 800 different hosts that I've worked with during my 5 years at PadSplit, as working as a general manager, I was on the operational side working with all of these new investors that came in. They drank the Kool-Aid. They loved the idea of the strategy. Get 2 to 3 times income. The problem they were running into is that after you go live, the people that were telling them the strategy, very few of them actually ran them. I think while I was there were 4 investors that worked at PadSplit. So if they don't know how to run the operating business, how the hell are they giving you instruction on how to make money doing this, besides just converting more rooms and hoping to God that it works? That's called hopium. Hopium doesn't work. And then through my evolution as a real estate investor myself, what have I found to be the biggest differential between those investors that do really well and those that struggle? It's the community. Who are you surrounding yourself with? Your net worth is defined by your network. So as I tell my kids all the time, show me your network, I'll show you your net worth. So that's what we're going to talk about, why the importance of community, shared learnings, let somebody else make a mistake and tell you about it so that you can avoid those same mistakes. All right, why co-living? Why now? In all real estate, you should be looking at that asset in 4 different quadrants. A, does it produce cash flow? B, does it give you appreciation? C, do you take advantage of the tax benefits? And then D, does your property allow for dynamic loan pay down? Meaning somebody else is paying you rent in a number that allows you to pay the mortgage and all the utilities so that somebody else is paying down your debt that you took on. Most investors are trying to get 2 out of these things. Some people buy properties and hold on for dear God and let time do its thing. And if you have enough time and enough money, if you're not cash flowing, that house should appreciate if you bought it in the right areas. Typically, the math is like every 10 years, that house value will double if it's in an area where people want to move into. I have worked with so many investors that bought in an area that was just in the ghetto, and they're like, why is this thing not making any money over the next 10 years? Because you bought it in the worst neighborhood ever. If you buy it in a C and a D neighborhood, it's not going to appreciate. So if you're waiting on appreciation, buddy, you're going to have a hard time because you see the historical trend. If people aren't moving into that area, that property's not going to appreciate. Third is the tax benefits. Are you set up correctly? Do you actually understand the tax benefits of what you're set up for? And are you taking advantage of them? There's a massive differential when you become a real estate investor between a CPA that processes your taxes and a tax strategist that helps you take advantage of the tax benefits written in the tax code to preserve the wealth of the wealthy. Understand that. So we're going to talk about all of these things. This is why the co-living right now is so important, because you get all 4 of these if you buy it correctly. I'm getting all 4 of these. I want to share that information with you. You should be getting cash flow. You should be getting and buying houses in areas that appreciate. You should be taking advantage of all the tax benefits that happen, especially if you're a high net worth earner. Yesterday, I just got off the phone call with a dentist and her husband. They bought a property, and by God almighty, they are losing money every single day. And on top of that, they're not taking advantage of the tax benefits they have. Okay, this is the evolution of the co-living market. The co-living marketplace has become so hot that people are talking about it left and right. It's very, very, very similar to what Airbnb did. So I'm going to go back in history and give you the quick idea. I've labeled this Generation 1. The original people that came into this market and exit strategy and said, all right, if you're telling me that if I could take this 15 to 1,800 square foot house that was a 3-2 and convert it to an 8-2, that I'm going to make money. So what did they do? They bought houses. They were early adopters. They took all the risk. So they worked with a platform like PadSplit. They're like, show me the money. They took these properties and they just made little rooming houses. 8 by 10 rooms. We had to create, as the platform, minimum standards for rooms because, like all entrepreneurs, if 7 is good, 9 must be better. So you started seeing this evolution where the rooms worked, the smaller rooms worked because there was no supply. So when the market place was created by places like PadSplit or Roomies or Bungalow or all of these people that started coming into this space right around 17, 18, 19, and 20, this Generation 1 grouping they just started putting more rooms in houses. And because there was no supply out there for tenants that were looking for affordable housing, they filled these rooms really, really quickly. Okay, what happened in 20 and 2022? That period of time is, I call this the maturation period. So, all right, you proved the theory over the last couple of years that people can make money using co-living. You have a marketplace that's showing that it's capable of filling the rooms. Now, all of a sudden, in the real estate space, or in that same time, Airbnb was getting punched in the face. So all of these people that had saturation issues or legislation issues or zoning issues, they own these assets, and they literally were unplugging from the Airbnb revenue model, and they were replugging back into the co-living model. This is about the time when you started seeing midterm rentals, or MTRs, become something that people were talking about. How can you take that same asset, and instead of selling time, weekends, 3 or 4 days, 5 or 6 days, and start selling the space? I think this was a big pivotal moment for us, because we, as co-living investors or shared single room occupancy investors, we were always selling space. We were never selling time. And that's the big arbitrage that people started understanding. So during this time, when you have somebody who was an Airbnb investor coming into the market, they brought with them all their learnings and histories of how to compete in that million property marketplace. They got better at pictures. They got better at descriptions. They got better at this hero shot. They got better at the marketing. They understood that the customer service that they were providing was actually just as important as the room and the house. And then today, I'll call this generation 2, from 2023 on. Gen 1 operators were struggling. They still had these cheap little houses with nothing in them. Now you had this next range, a generation of investors that came in that were more hospitality focused or service focused, better photos, better houses, better locations. And then we started seeing this divergence in the marketplace. This is called competition. This is what happens when you are in a marketplace with other better operators. And no matter what kind of business you're in, the best operators will always surface to the top. So the question is, do you understand the operating business enough to know even how to compete? What levers are you pulling? So that's the question that we're going to try to answer today. We're going to tell you about a framework. If you're not following one, learn. All right. Again, though my photo is supposed to be right here and it didn't post. All right. Just imagine my head being in that picture. All right. This is my background. Why are you even listening to me? This is my CV. I'm going to start from most current to back. I spent the last 5 years working at PadSplit. I came on as a general manager, and I had this amazing seat where I was in this place where I had the ability to kind of work with hosts that were investors and the actual customer base. In every business in my entrepreneurial history, I've always wanted to know what the customer's journey was, because I reverse engineer everything. And that goes back to the very beginning when I first started. I was a consultant for Accenture. And as a business and process consultant and a strategy consultant, you start with the end customer's needs, and then you work backwards to requirements to build the system that delivers what your customers needs. That's always been in my DNA. Even when I left there from consulting, I had children. I couldn't travel anymore. I bought a business. It was a Boar's Head deli distribution company. I reverse engineered everything just because that's the way I think. You get into that space, you learn what you're talking about, and then you start realizing, hey, I'm selling a product. What do my customers actually need from me? And then I work to deliver that. In my world of deli distribution, it was a logistics company. I had my own issues that I had to work in, my own systems in terms of how do I order the right amount of product? How do I make sure it gets delivered on time? And then I turn around and I say, wait a minute, if I'm delivering it into a customer like a supermarket chain like Publix or Kroger or Sprouts, their needs are a little bit different than a catering company or a country club or a deli shop. So you have to be able to cater your product and your services to the needs of your end customers. That's always rang true. That's the same business philosophy that I took to my co-living portfolio. Year 2, when I was working at PadSplit, I started realizing that all the hosts that I was working with, yes, they had properties. Yes, they had rooms. No, they weren't all making money. What was the differential? those investors that were operators that looked at their business and said, how do I make this an operating business with consistent systems and consistent processes? They were way more successful than the new investors who just drank the Kool-Aid, bought a house, put walls up, put furniture in, and went live. And they sat there with their fingers crossed, hoping. That was the big learning. So I spent the 5 years, and I was like, wait a minute, what can I do to learn the business? So I went out and bought my first property. Bought my first property in 22, and then I started testing all of these different learnings that I got from all of these different investors, and I started applying the best practices into my own property. And I kept and started codifying, if that's the word, the best systems that I had seen, and I kept testing them. If that was good, how do I expand the goalpost to try to make it a little bit better? And that's eventually the systems that I created in this framework around CoLivingiQ. I eventually left because I found that there was a kind of a discrepancy between the product and the platform and what they were trying to build for and what the experience that I was having as a customer. My needs were not always aligned with the platform that I was working on. So I left. I've tried to fill that gap, and that's what I'm doing now. This is what the coaching is. This is what the program that I work with is. I hated seeing entrepreneurs put their money on the line and not make money. So this is what this whole thing is about. So what are the numbers behind this? I've worked with over 800 investors. I spent 5 years working there. I understood the business operating model on two sides. One, on the host side, what is their operating business? And two, what are the needs of the customers that we're trying to service? And not all customers are the same. Understand that. So if you can understand the customer journey and who that customer is, we will call this an ICP, an ideal customer profile. Not all things match all customers. So for me, I decided, hey, which of this customer profile did I want to service? And I try to service the top third of all customers that come in PadSplit from a financial standpoint, because I am a service-based person. So that's the business that I run. So I catered my product, where I bought it, what neighborhood, how I converted the property for what kind of business. And then that was the customer that I was attracting. I marketed to that customer. I interviewed for that customer. I screened for that customer because as an owner, I wanted to eliminate the biggest pain points that would kill my business. As the famous Charlie Munger would say, as an entrepreneur, your job is to stay in business. You avoid the things that are going to kill your business. Customers that don't pay, customers that don't get along with others, and they drive away good paying customers. You try to set up your systems so that you can avoid the things that will kill your business. Third, complete the frameworks. This is how I created the frameworks around co-living as I see for brand new investors. How do I buy right? How do I convert right? And how do I operate correctly? If I can continually do those things, then I have an operating system which allows me to do the things that I really love about being a real estate investor. I love the deals. I love being able to identify good properties, buy them correctly, convert them intentionally, and operate them consistently. That's the business, but I really like the deal flow. So as a real estate investor, as long as I set up my operating business, I was okay, and I could focus on acquiring new properties. And then I can't tell you how many properties. It's been more than hundreds of properties where I've analyzed and underwritten for other investors, underwritten for myself. Every single day, I have an hour block where I have an acquisition block. You start seeing trends in the market. You start seeing pricing trends, whether they're dropping. You start seeing refinancing trends. What are the appraisals in certain areas? These are all super important as you're getting into this space. All right, here are 9 mistakes that keep co-living investors stuck. Let me just tell you about my favorite ones, okay? Buying the wrong property. I cannot tell you, and I cannot reiterate to you how many investors get into the property in this business incorrectly. If you buy it wrong on the acquisition side, if you mess this up, you put so much more stress on your operation side, which means if I buy it wrong and the amount that I have to earn in this house is going to take 6 out of 7 bedrooms to be filled, or 7 out of 8 bedrooms to be filled just to break even, and I'm hoping to make that last bedroom's worth of money, you're in trouble. Here's the cardinal rule about co-living. We as the owner, we as the operator of a co-living property, we are always the last to get paid. If you think about your underwriting from that perspective, it will help you make better decisions on acquisition because you're not praying to get to 100% occupancy to make any money. You have to understand the co-living operators in this world, we're always the last to get paid. So you better understand how you're operating your business. 2, treating your co-living rentals like traditional, that's kind of simple, right? We are a people business. Co-living is a people business. You have 7, 8, and 9 people living in a house. That's people management. The house and the asset management, that's easy. How do you keep 6, 7, 8, 9 people from knocking each other's head off because they're strangers? You put them under one roof. That doesn't work that way. You have to have systems for the people management. No standard operating procedures and processes. Probably the number one realization when new investors talk to me. My God, I did everything I was told to do. I converted it. I bought it. I put walls up. I put furniture. I bought the list of Amazon furniture that you told me. I'm not making any money. Are you treating it like a business? Do you have operating standards? Can you go to sleep at night and know your business is going to run on its own? No. After you went live, the number one reaction I get from frustration when I talk to people is WTF. What now? It's because you don't have systems that you're implementing. You don't have repeatable systems and processes that allow you to run your business. And that kind of goes back to number 7, right? You're all acquisition focused, very little operation focused. Because as your natural progression as a real estate investor in co-living, you didn't know. You didn't know. The things that you could control on the acquisition side, because I'm the person that's writing all the checks. I'm buying the property, paying the realtor. I'm putting the utilities in there. I'm put the conversions in there. I'm making all those decisions. I feel like I'm in control. Once you go live and you now have a product and now you're sitting there hands out waiting for customers to come and pay you, if you have very little levers to pull and you don't understand the operational business you're in, you're going to lose money. Every single day, that's kind of the situation where I talk to brand new students that come to me. They're so frustrated. They're like, I lose more money every single month because I'm in this business and nobody's there. Or the people that are there, they're not paying. Or the people that are there, they're chasing away the good people that I have. And then 9, this is the number one reason why people get stuck for one property and never build to 2. They get fed up. They're working in a silo. They're trying to learn this stuff on their own, and it's killing them. You need to put yourself in a network or a community where you're learning through osmosis. You want to see what that person 3 steps ahead of you is doing. You want to see what that person 5 stages ahead of you is doing. Sometimes that person that's 10 stages ahead of you with 100 doors, they're doing things that you don't have the skill set to do yet. So you need to see the natural progression because you can make different decisions that help you in the long term by learning from somebody else. Let's focus on the acquisition. I coined this term, acquisition gets you into the co-living game. Operations will ensure that you win. In every business that I've ever had, ideas are great, strategy is great. It's the execution that gets you there. If you don't make money in an operating business, you're going to close your doors. Some of the greatest ideas in the world have failed because they've had bad operators. Like I said, this is the natural progression. Don't get frustrated, but you do have to understand your second house purchase will be exponentially better than your first. Most people that I talk to in real estate, they call this the tuition. So you're paying tuition to learn these things. It can be costly if you don't make the right decisions and changes and you continue to make these mistakes. Every mistake costs you time and it costs you money. And in real estate, time is almost a bigger problem than just the money. This is the framework that I've built over the last couple of years. I focus on acquisition. How are we buying this property? Where are we buying this property? What's the strategy of buying this property? Why am I buying it? And then what is my financing going to do? If most people use an underwriting calculator, then they just look at the actual property. Many of them will come back and say, hey, this property gives me a 15% return. And then I would look at the acquisition of it. I'm like, yeah, but you bought a house on market for 300,000. You're going to get a loan from the bank at 75% of 300,000. But then you didn't take into account the conversion, the furniture, the holding costs. Everything is now that project. Add $50,000 to $60,000 to that. It's a $360,000 project. Here's the problem. You take the $60,000 that you put in after you bought it, and you only put 20% down. So that's 60,000 plus 60,000. You're $120,000 into this thing. Let's say it's a 7-bedroom property at $1,000 a month in total rent for 100% occupancy, which you should never underwrite for. But 50% of that's going to go for all your utilities. So at a $300,000 mortgage, you are essentially paying $2,000 in mortgage, $1,000 for utilities, $1,000 for platform fees and everything else. That's $5,000. If you're 100% occupied and you make $2,000 a month, that's $24,000 a year, barring anything breaking. And welcome to the world of real estate. Things are going to break. So you better have a pool of money set aside for that. It's going to take you 90 days to get this house stabilized for that income that you want. You better have enough money in a working capital account for that. You have to understand the business you are getting into. So buy it correctly. Then we talk about the conversion. If you're going to spend the money to convert a property into a co-living property, what's the intent? Is it because you're trying to answer a spreadsheet, so you're going to build 6, 7, 8, 9 bedrooms? Or are you trying to meet your customers' needs and your ideal customer profile? So you're building a house for that. I'll give you an example. My first couple houses, I bought the Amazon shopping list. I hate that shopping list. The furniture is fragile. It'll break down. I always have extra parts. I have to pay somebody to put it together. It is just a horrific situation. I've now made the conversion. I only buy hotel liquidated furniture. It is cheaper than me buying individual things off of Amazon. It is way sturdier. It presents much better. The photos look much better. The customers have much more better, referrals and much more like feedback on the quality of the furniture that's there. Why not learn from people that did this professionally? You don't think people in the hotel industry have figured out what the best hotel furniture is? That's why I use hotel furniture during my conversions. And then the host IQ is, this is how we operate. This is what allows me to sleep at night. This is what allows me to outsource it to a third-party property manager because I have an idea of what the operations should be. So if I hire a VA or if I hire a property manager, I can hold them accountable to deliver the business the way I want to. This is kind of like the evolution of what ends up happening for people that come on and they start at the platform and they go right into like, hey, I went live. I'm going to let the platform handle everything. You did not sign up to be an employee of a platform. They are a vendor for you. Do you understand how to get the most out of that platform? Do you understand how to squeeze the juice out of the money that you're paying? Are you getting value for your dollar spent? Are you running your business on the platform using all of the platform amenities that are available to you to optimize for your business? Probably not, because all the times I was there, the only reason that I had a distinct advantage was that I knew exactly how the platform worked. I know what levers were important. I could read the data. When I talk about the matrix, many people just see the data and take it at face value, zeros and ones. Whereas I could read the data, knew the nuance behind the data, and I was seeing pictures so I can make operational decisions based upon that. It's up to you to decide. Do you actually understand what the data is telling you so that you can make an operational decision? All right, in the acquisition part, we're going to talk about, are you buying right? Do you understand your financing? Do you understand why you're buying that property in that area and what areas to avoid? Do you understand how to look at the market data that's provided for you? And for instance, I love the data that's on the market insights map, but I understand the nuance of that data. It is not current. It is for all the existing people that are in rooms over the historical time of 5 years. That doesn't help me, right? Like this is like if you buy stocks, historical performance is not predictive of future performance. Yeah, we get it. But why do we not look at that? Why do we take it as gospel? when the market insights will tell you first booking 7 days, 8 days to 80% occupancy, 45. I've got a room that sits in a property right now over 100 days vacant. Does that piss me off? Yes. Does that kill my business? No, because I'm at 88% occupied or 83% occupied. So I can carry that room because I'm selective about who I want to put in there. It's my business. I'm okay with it because I'm still profitable in that house. Do you have a strategy for the number of rooms that you want? Do you understand how you're going to refinance it? Are you de-risking your business? You have to understand, and this all comes to the acquisition phase. Here's a case study of a property that I just recently bought. I talk about it. This is the hardwood property that I have. I bought it. It was a 5.2. Big ass house. It's 2,900 square feet. It's a split level, set up in a hill, back in a cul-de-sac in a nice area. I ended up starting the budget at $83,000. And then throughout the conversion, I had to add in a second air conditioner. I converted the garage. I had to dig out dirt to make more parking and ultimately put up a fence, guardrails for the stairs, the whole kit and caboodle. But it ended up costing me $103,000. Why was that okay? Well, I bought it for $217, and the ARV for the house was $405, right? So I had some wiggle room because I bought it right. I ended up converting it. The original, the plan was to go from 5 bedrooms and 2 bathrooms to 7 bedrooms and 4 bathrooms. I ultimately ended up saying, hey, I could put a bathroom here. Would it save me money to put a bathroom adjacent to it? And it did. So I ended up putting in 4 additional bathrooms. I converted the garage because I had more bathrooms, and I put 2 more bedrooms in there. So the potential for this house is 9 bedrooms filled and occupied. Why did I get there? Because I had enough room in my purchase to conversion that allowed me to get there. The after repair value allowed me to get a DSCR loan down to 303, and that essentially covered my costs minus about $20,000. So if I run it 100% occupied, I get about $9,000 in total gross income. That's really, really ridiculous. That's like better than Airbnb money. But I always underwrite to how many rooms do I need for break even on a blended rate. So my room rates go from 174 for the smallest room. All the other shared ones are right around 190 or to 200. And I have 4 master bathrooms that are 250, 250, 279, and 271. Those 4 bedrooms were the first to fill. How did I know that? Because historical data would tell me your bathrooms that are private are going to fill the fastest. So in about 21 days, I had 4 people move in, paying over $250, which allowed me to break even. So I wasn't so worried about this house because I wasn't coming out of pocket to cover the costs. And then I spent the time trying to manipulate the listing and ask for referrals. And then I'm now filled up to, there's 7 people in there. One of them is a couple in a private bathroom. So I have 8 people in a 9-bedroom house. I'm making about $1,800 net on this house every single month, barring any maintenance problems. Like I had to put a dehumidifier in for $200, but that's the cost of being an operator. I want my customers to be happy. I want them to stay. So I'll invest in the property. Conversion. This is stage 2. This is a separate module. We go over this in detail. Build right. Don't just follow some checklist from somebody who was an intern at the company that told you, you got to put these walls up and this is the stage, this is the. You better understand what the hell your customers want. If you look at the surveys, customers want large rooms. Customers want private bathrooms. They want to have, space. They're not looking for an 8x10 shack. A lot of customers don't want to live in an institution. I don't want to provide that for me. Some customers and some hosts, listen, that's their whole game. Think about it, right? In the restaurant industry, in the Uber industry, like Uber shared, Uber regular, Uber black. I am an Uber black driver. So I converted my property intentionally for that customer in order to get my ideal customer to book the rooms. And lo and behold, what did they do? They booked the 4 private bathrooms first. You have to understand this. And as this business is evolving and changing, that's how I came to the idea that hospitality has to be incorporated into my build. So I always leave common spaces because I want people to feel like home. If somebody feels like it's home, they end up staying for a longer period of time. That's the shared space strategy. It is in direct contradiction to what the CEO Atticus at PadSplit says. I remember we had this post on their Facebook page and he responded back, couches cause chaos. Bro, maybe in 2017 that was the case, but today it's about tenure. The fee structure in 2017 when they first started was 12% of every dollar collected from day one. It didn't matter. The entire business model was fill the room, collect 88 cents on the dollar. Today, the fee structure for that platform, PadSplit, that I use, I still have 2 of my properties on PadSplit. It is the first 10 days goes as a customer acquisition cost or a booking fee to the platform. Well, that changes the business model a little bit. If I don't collect the first 10 days and I only start collecting on day 11, that means that I'm still paying the mortgage, right? And I got to cover that cost for that booking fee. Well, that puts all the stress on extending the tenure for that customer to stay a long period of time. So that's why I built my properties a little bit different. Premium on budgets. Some people are looking for where they can save. For me, I'm looking at where can I invest. Smart furnishing strategies. Find durable furniture that will last past the first booking. Because if you make money in a booking and all of a sudden you have to replace the nightstand, which I've done. You got to replace the little lamp, which I've done. You've got to replace the bed, which I've done. You didn't make any money. So find furniture that is durable and made for this kind of business that we're in. All right, let's go on to the next part. Operating. Do you know the platform that you're paying for? You're paying 10 days and 8%. I'm going to speak to PadSplit because I have so much detailed information about it. Since I've left PadSplit, I consider myself a single room occupancy or shared housing investor. Some houses are really make sense for PadSplit. There's other houses where I can do SRO in a 4-bedroom or 5-bedroom house, but it's better suited for a different platform. Why? Because I'm going to acquire properties that are a good deal if I understand what the exit strategy is. If I was a PadSplit host and I was taking on a mortgage and debt, I would never take on a house less than 6 bedrooms. There just isn't enough juice left in the squeeze. So if you buy a house for $250,000 and put $50,000 in renovations at $300,000 total, how many bedrooms are profit? So you have to understand that. Getting back to the platform, once you list your property, it's not magical. It's a platform, just like any other thing. Like you're at home and you have this TV that gives you access to Roku, Netflix, Amazon, Apple, all of these things. Do you even know how to get there? Do you even know how to log in? Do you even know how to get the most out of your TV? Think about that, about this platform that you're paying 8% of your gross income to. Are you getting the most out of the platform? Do you understand what the algorithm says? Do you understand what this gold key thing is all about? Why are they pushing it? Do you understand how it impacts your business? Do you understand what the pricing signals are in your marketplace? Your listing hygiene, is it truthful? Do your photos match what you're actually delivering? Do you understand how to the impact of reviews and how they're trying to lean toward Airbnb models where customer reviews are really important? Do you know how to use the promo tools? So many of you, when I look at your listings, when they come to me in the beginning and say, I'm not making any money, I show them their listing and I ask the question, would you stay in your own house? And when people say no, that's really scary because you have very little idea of how to run your own business on the platform that you're paying for. You're not getting value for what you're paying for. This is what's really important. If you're going to post a property and run it on a platform, you better know how the platform is working so that you can optimize it. Here's the gap. People that have unoptimized listings, about 65% occupancy. Listen, the system will work. And if you're cheap enough, people will book your room. But the ones that are optimized, they're running over 90% occupancy. I think all of our students that I have are over 90% occupancy if they have 1 to 2 properties. The ones that have bigger properties are probably about 82 or over 80% occupancy because they'll have turnover. And every single one, every stage is a little bit different. So you have to understand, how am I optimizing for occupancy, but not just occupancy. Occupancy for customers that pay me on time. There's a big difference, because you got to remember, as an entrepreneur, we take money to the bank. We don't take percentages. So if you tell me you're 100% occupied and then 6 out of those 10 people, they're not paying, does it matter if you're 100% occupied? What money are you putting in the bank? Let's think about your business that way. All right, here's the thing. Are you competing on this platform? When I first joined PadSplit, there were 3,000 rooms. When I left PadSplit, there were 33,000 rooms. So the market is exploding. That's how their business grows, right? They're based on a valuation based upon their MRR, monthly recurring revenue. So they're out there opening cities all over the place. I heard Sacramento just opened, and Seattle's now open, and all of these new markets are opening. That just means more competition. So when people are coming to this platform, are you competing, or are you just letting your property do its thing? I pulled 3 listings. This is the default setting. Live in Atlanta, no description, no branding, at a high price. Why? Because they took it right off of the suggestion. Same one on the other side. Default setting, no photos, 153. Why? Because that's what the platform told me to do. This is a room. This is one of my properties. I literally wrote it, the exclusive Rent Smarter Co-Living, the Uber Black of PadSplit. Why? Because I know that 80% of the customers book their rooms on the mobile. So if you got 500 characters in your property description and you're talking about stupidness in the first 77 characters, do you even understand that the first 77 characters are what they call above the fold? So when you look at it on the mobile device, what is your listing actually communicating in the first 77 characters? If you don't understand how your customers are going to book your room, you're in trouble. Do you even understand what are the things, amenities inside the room that make people want to book your room? If this is like your Tinder profile, if it's ugly, nobody's going to click on you for a date. So you better make sure your listing is tight and you're attracting the right customers that you want. All right, this is the operating piece. This is the kit and caboodle. We call it Host IQ. This is essentially everything that breaks down between how do I run my business from empty room to filled room to customers that stay for a long period of time. Currently, right now, I run about 19 months on average tenure. Why? Because all of my operating focus is around customer retention. That is my North Star. If you don't have a North Star in terms of how you're operating your business, what decisions, how do you make a decision between A and B? You better understand what the operating North Star for your business is. For me, it's resident retention. I want customers to stay. Why? Because if I had to pay the booking fee, it takes me about 7 months to recoup that number. My average room, I'll say, is $210. Divide by 7, that's $30 a day. Times 10, that's the booking fee that I had to pay PadSplit for that customer. That $300, I will have to have that customer stay for about 7.5 months to recoup that money. So if you have nicer properties at $350, $400 a room, I don't know why, divide by 7, multiply by 10. How many weeks will it take you? How many months will it take you to recoup that number? Why do I focus on community management? Because I have done my studies. I have gone deep diving into co-living. I've looked at the European models of hostels and of digital nomads. Why do those things, why are they so successful? Because people have a reason to be there. They have a sense of community. They have a sense of belonging. Here's one of the fallouts of COVID. People are lonely. And right now, like, people spend most of their time on their cell phone, right? They are thumbs down, head down. Can you build a community where somebody wants to come home? They look forward to coming home because of the people that are there. When you have a problem, you have support from the people who are there. That's why I spend so much time talking about community. The other piece about it, I've learned over the years that co-living is a people business. Do you have systems in place that allow you to manage the people, the personalities, create a communal acceptance of what the standards are? I just made a video about this and I'll talk about it again. There are things that every single co-living house has problems with. Who takes the garbage out? Who's leaving dishes in the sink? my sense of clean is different than your sense of clean. If your the community of people living in your house doesn't have an agreed upon idea of what clean looks like, they can't hold each other accountable. They just yell at each other. They judge each other. And then the other person who's being judged gets resentful. And then that person ends up leaving. Well, that person was a great tenant. They should have stayed for a year and paid you $1,000 a month for the course of a year. That's $12,000 that walked out the door because you couldn't solve who takes the garbage out. This is what I talk about. You have systems in place where you can communicate with your customers and reset standards. This is all part of why we created HostIQ. Reality check. It's one of the best cash flowing strategies out there, co-living, rent by the room. It's also one of the most operational demanding. It's not a business. It's not a landlord play. It's a co-living human business. It's a hospitality business. Here's a saying I want you to think about when you consider where you're going to buy a property and how you treat your customers and which customers that you select and approve. If you choose your customer, you choose your future. If you're so desperate to fill a room and you say yes to everybody, do not have the nerve to complain when that person is a jackass. If you didn't do the financial validation for does that person even have a job, don't complain they can't pay you rent. It's just common sense. Before you start buying your second house, you better make sure you have some systems in play. I've seen this multiple because real estate investors that are new, they think buying properties is real estate investing. No, that's just property acquisition. Unless you have so much money that you need to deploy it, you better find properties and understand that you're building a business that has to pay for those properties. As soon as you take over a property, you have a liability. Does your business pay for it? And then you have to understand that, as this market is evolving, if generation one is exiting, meaning like the 9-bedroom, 3-bath, the 10-bedroom, 3-bath, like the original OG houses, why are they leaving? What are they having problems with? Where are those customers moving to? So if you understand that this system and this business is evolving toward more of a hospitality focused, and you can take learnings from Airbnb and Midterm and Furnish Finders and nurses, you can take those learnings about what those businesses are struggling with and incorporate them into your co-living business. This is the evolution I want to talk to you about as a brand new investor. You drank the Kool-Aid. You bought into the idea that more rooms create more revenue. And then all of a sudden you go live and you don't understand how to make it work. The opportunity is real. People aren't failing because the opportunity isn't real. They're failing because they don't know how to take advantage of the opportunity. They don't know how to operate the business. So when I talk about the same things, show me your network and I'll show you your net worth. You better find a community that allows you to be supported, teaches you things that improve how you're doing your business. That's why we have a CoLivingiQ community. It's investors from I don't have my first property to investors that I own 100 doors. Everybody's getting something a little bit different. The guys that own 100 doors, they were originally generation one when they've continued to evolve and buy new properties with a new hospitality, and they're evolving their business. The people that are new coming in, you can't copy a playbook that worked in 2017 if you know it doesn't work today. I see investors buying houses and they're making them in a 9-bedroom, 3-bath, 8x10 little rooms. It's not working. Unless you want to be a slumlord and you want to just compete primarily on price, it's hard because the financing and acquisition in today's economy doesn't allow you to do that. These people that had these original houses, think about it, in 2017, the economy was in shambles and real estate investors were buying houses for $10,000. Now, in 2026, that house is worth $400,000 with no debt. They can lower their price to $2 and still make money. So when you see your competition lowering their price to $130, $120, $100 a room, I don't have the ability to do that because I bought my properties between 2023 and 2026. So I have to run my business according to the financing and the needs and liabilities that I took on when I bought the property. So you got to figure out, how do I make this compete in today's world? Learn from the other investors that are in the room. Find communities of people finding success in your current situation, or they can apply previous learnings and you don't have to make the same mistake they did. Welcome to the CoLivingiQ. This is the mastermind. I'm here to tell you this is the value you get from joining this group. We have weekly coaching calls. We have mastermind calls. We talk about deal analysis and go over it. The biggest thing that I'll tell you from new investors, they just lack confidence. The good majority of people that I find as new students, they have done so much research between AI, between YouTube, between other communities that are out there. They have done so much research. They just lack the hand-holding and the confidence building to say, I think this is the right decision. Can you just validate that with me? And then we go over the decision process. And 9 times out of 10, it's the right decision. They just didn't take it deep enough. Meaning, right house, right idea, right exit strategy, right conversion plan, except they didn't know how deep to go on the offer. Oh, I don't want to lose the house. There's always going to be another house. But if it doesn't financially meet your underwriting, don't buy it. Because all you're doing is taking on somebody else's problem at that point. So I'll give you a quick story. One of my favorite students, Laura, she had a massive transition from information hoarder and knew everything about it to action taker. She now owns her first property. It's 7 out of 7 delivered, filled and occupied. She's looking for her second property. She's so much more confident today than she was a year ago. So she now understands how to underwrite property. She now understands and has the skill stack to be a wholesaler, looking at properties off market. Her first property was listed at 179. She wanted to offer 159. We came back in, analyzed it, and I suggested 135. She ended up buying the house at 133 with a seller credit at closing. That's the cost of having somebody just tell you, try to go deeper, expand what you think is possible. And then once she went live, we talked about the listing optimizations. What are the digital blueprints and templates that you need for your SOPs? Listen, the way I do it doesn't mean it has to be the way you do it. But what I identified is the problems and the holes and the gaps that you need to fill in your systems. If you sit back and say, I'm going to let the platform do its thing, you don't have the option to complain. Okay? And now you just have to deal with whatever is accepted. No, this is your business. Treat it as such. Have some stake in what you're doing and how you run it. Something as simple as photo optimization. Community and accountability, not only for the people in the house, but also for you, the investor. The people in the community hold each other accountable. You said you're looking at properties. How many did you look at? This week was busy. Well, every week that goes by and you're not underwriting properties or putting in offers, I guarantee you're not going to buy a property. So the communities allow you to be held accountable. And then you start having scaling strategies because property 2 is different than property 3. You now have a team of people and referrals for vendors, cleaners, GCs, handymen, plumbers, HVAC. You're more comfortable scaling because you're looking at projects and you're not scared of them. I remember when I first started, I was like, oh my God, I would never buy a fire burned out house because I don't know what's behind the wall. Because of the people in the community, I have much more confidence to get in them as long as I buy them correctly. And now I have a plan and a different way of analyzing each deal. That's the power of a community. Here are the members that are getting some results. I talked about Laura. She's in Kansas City. My boy Bao, he's a short-term mentor, student mentor. He wanted to add co-living into his arsenal. He's on his 3rd property. Gordon and Timmy, these guys are wholesalers. They're based out of Phoenix. They're now on their 4th property, but theirs is an interesting one because they could always find deals. And the way they underwrote them, they would find a private money partner or a PMP to finance them. And they just looked at the spreadsheet versus understanding the operation and the nuance of the operation. Their first couple of properties they thought were great deals were not great deals because they left so much of their PMP's money in that deal. It's going to take them 5 years to get that money back. So as a creative acquisition people, they've now had to pivot the way that they acquire properties and how they underwrite properties so they become much more efficient. So they're actually building an entire business where they can identify properties and then they have PMPs that come in and partner with them and they're building their portfolio because they can talk about the properties in a nuanced way that just makes sense. And then they actually deliver on the schedule for the financing. If I'm a private money lender and you do what you say you're going to do, I'm more likely to give you the money for your next deal. That's what these guys are proving out. So they came to me to learn the business. And then from there, they're building out their own business, which is amazing. All right, here's everything you get for a year. So I sell this in 2 different ways, and I offer 2 different investments. One is a 30-day boot camp. A lot of investors that have current houses, and they're kind of arbitrarily all over the place. They come in, give me your blueprints, give me your system. I want access for 30 days. Answer all the questions that I have. Easy. I had to create that product because customers asked for it. If you are new to this and you want to get better over the course of the next year, it's a year-long program. Those students take the evolution from, I'm looking for a property. Please help me guide that property and buy the right one. Because as an investor, if you leave $100,000 in your first property, you're never buying a second, because it's going to take you forever to get that money out of that property. Learn how to acquire correctly. You will save more money on your acquisition process by working with me than it costs for the entire program for the year. And then the reality of it is, every single student in our mastermind and our mentorship, they're building portfolios. They're now comfortable with the operating system and how to acquire. They're now looking for their second property because they're comfortable. Once it goes live, they already have a blueprint for how to run it. So they get the acquisition IQ framework. They learn how to do the conversion. They learn how to operate. They've got their systems and SOPs in place. Then they circle back around and buy the next one. The next one has much less pain, tuition, learning, because they're implementing a system. And listen, I'm heavy on the hospitality side. I've got students that work with me. They're like, look, I'm remote. I can't do it the way you do it. I like the ideas that you're implementing. How do I make a hybrid version? So we tweak it. But the most important thing to take out of this framework is, where are the gaps that I need to fill with the system and in process? That's what we teach you. Sign up, go visit our website, CoLivingiQ.com. If you have questions, just schedule your free assessment on that. 2 things that you can join. You can join our mastermind. You can join our monthly program. I have a one-on-one student that pays me $18,000 a year. That's not for everybody, but that person understood the power of one-on-one working. The core product that we sell is a 1-year membership into our program and mentorship and mastermind. It's $59.99. That's for the whole year. And then if you want a 30-day boot camp sprint, it's $14.99. Those are the products that we offer. Those are the communities that we have. Feel free to join. Take a look at our website. It's got all the information that you need out there. I'm going to stop. I'm trying to stay within the hour, which I think I can. So if anybody's in there, if anybody has a specific chat or anything else that you have any questions for, I'm here for the next couple minutes. Fire up, jump on the chat, ask any questions that you may have. This is interesting because I forgot. I'm also live on YouTube. Dun, dun, dun. Does anybody have any questions on that? Let me see what's going on here. I'm trying to manage both, so bear with me. All right. Does anybody have any questions they want to ask? Dun, dun, dun. Let's see. No comments. Okie doke. All right. We're coming up to the hour. I'm respectful of everybody's time. I want to be respectful because usually I end up going over like 30 minutes. So I'm trying to get better at this. Feel free to use the chat on here. It's very simple. My email is very straightforward. I'll tell it to you. It's Quentin, Quentin, at CoLivingiQ.com. Send me an email. I'd love to talk with you. If you have any questions, please feel free to chime in. Okay? All right, everybody. Have a fantastic day. Best of luck in your journey as a co-living operator, and I will talk to you soon.